Avoid these common investment mistakes for a secure financial future. Investing without a clear plan is like gambling with your money. If you dive into investments without specific goals, when will you see returns? Ask yourself, why are you investing? Is it to buy a flat, a plot, or a house? Are you saving for your children's education, your daughter's wedding, or your retirement? And when do you need the money? 1 year, 5 years, 10 years, or 20 years from now? These are critical questions to answer before you start. Financial planning is essential. You need to decide whether you're investing for short-term or long-term goals. For instance, equity mutual funds are great for long-term wealth creation, but if you invest in them for short-term needs, you might face losses or even lose your principal. Goals give your investments direction, like a goalpost in football or wickets in cricket. Without them, you're just kicking a ball around aimlessly or swinging a bat with no target. Imagine playing football in front of thousands of spectators but with no goalpost. What's the point? Or batting in cricket without stumps. Where's the game? Investments without goals are the same. They lead nowhere. One of the biggest mistakes is investing without understanding why. Ask yourself, what do you want to achieve? Is it financial security, a new home, or a comfortable retirement? Without a clear plan, structure, or organization, you're setting yourself up for failure. I've made this mistake myself. I used to jump into equity investments without thinking, caught up in the excitement of potential gains. When losses hit, I panicked and later regretted my impulsive decisions. Don't let emotions drive your investments, whether it's the thrill of quick profits or the fear of losses. If losing money hurts you deeply, only invest what you can afford to lose. That way, even if things go wrong, the pain won't be overwhelming. Another common mistake is chasing high returns without assessing your risk tolerance. Many people, especially younger investors, think they can handle high-risk investments, but not everyone can stomach the volatility. I used to be reckless, investing in equities without proper research, only to panic when the market dipped. If you're someone who feels uneasy about losses, don't invest in high-risk options just because others are doing it. Understand your risk appetite first. If a big loss would devastate you, stick to safer investments. Otherwise, you'll be stressed, unable to sleep, and constantly worried about your money. A third mistake is blindly following others' advice. Just because a friend or someone you admire recommends an investment doesn't mean it's right for you. Everyone's financial situation is unique. I've been guilty of this, listening to others, assuming they knew better, only to realize later it was a mistake. Nobody's perfect, not even the experts. In the stock market, even if 55% of your decisions are correct, you could become a millionaire in a month. But no one gets it right all the time. Even the best investors make mistakes. Learn to think for yourself. If someone's advice doesn't align with your goals or risk tolerance, don't follow it blindly. You wouldn't jump into a river just because someone else did, would you? Another critical mistake is putting all your money in one place. Diversification is the key to managing risk. Banks, mutual funds, and financial institutions don't put all their money in one stock or industry. They spread it across various assets. Why should you be any different? Don't think one investment will make you rich overnight. For example, real estate might seem like a safe bet, but there's no guarantee it'll give you returns when you need them. Commodities, startups, or the stock market can be options, but avoid putting all your eggs in one basket. Spread your investments across different asset classes to protect yourself from losses. Be cautious of brokers or platforms that charge hidden fees. Some brokers charge high transaction fees, eating into your returns. For instance, if a broker charges for every trade and you make 10 transactions a day, that could add up to thousands in fees over a year. Look for platforms with low or no fees. Some offer free trades for life, while others charge minimal fees for specific plans. Always research thoroughly before choosing where to invest. Don't just go by what sounds good. Read reviews, check search results, and dig deeper. For example, platforms like RM Strong or MS Topper are trusted, with millions of users and billions in trades. They've been approved multiple times and have a strong track record. Compare platforms, check their fees, and choose one that aligns with your goals. The biggest mistake is overconfidence. I've been there thinking I knew it all, only to realize I was wrong. Nobody's perfect. Mistakes happen. I once invested heavily in a single stock thinking it was a sure thing, only to lose a chunk of my money. Don't let overconfidence cloud your judgment. Regularly review your investments. If something's not performing, ask why. Is it a temporary dip, or do you need to pivot? Rebalance your portfolio to ensure it aligns with your goals. If you're investing in real estate, commodities, or startups, make sure you're not overexposed to one area. Diversify and stay disciplined. Avoid emotional investing. Don't let greed for quick profits or fear of missing out drive your decisions. If you're investing in volatile markets like stocks, expect ups and downs. Don't panic and sell at a loss, nor should you get overly excited and invest more than you can afford. Treat your investments like a marathon, not a sprint. Slow and steady wins the race. Regularly review your portfolio, assess what's working, and make changes if needed. If an investment is underperforming, find out why. Don't just hold on hoping it'll recover. Finally, don't trust anyone who promises guaranteed returns. If someone says, "Invest here, it's a sure thing," run the other way. Even banks, mutual funds, or international institutions diversify their portfolios to manage risk. Nobody puts all their money in one place. Not banks, not fund managers, not anyone. If you want to avoid being a fool, organize your finances, control your emotions, and invest thoughtfully. Share your financial details in the description box below, and let's start your investment journey together. Let's make smart decisions, avoid these mistakes, and build wealth the right way.